Microphone check and screen share check, please. Yeah, we just finished up the Monday night true story circle for the Creativity 202 guys. Pretty amazing stuff. I'll say it that way. Ed, Luke, would you agree with that? Just a head nod. Can I get an amen on that? Moved to tears. This was my notes from that lesson on lesson number 1 of 30. So there's still time to join. Born to Innovate. It was a review of family tree and ancestry and our DNA of innovation. And then my contribution to the lesson was about desperation, and the true stories were just off the chart, touching and moving in every respect. And the application to trading are so obvious and profound that we're on lesson 1 and guys are getting transformed in front of our eyes. A group of strangers is no longer a group of strangers. It's pretty amazing what true storytelling, creativity, and truth telling will do. Safety, trust, truth, and opportunity in that sacred story space. It's pretty good stuff. So let's get started with today's work. So yesterday we were looking at the Friday there was that 1, 2, 3 entry that made it up through the PSAR, and we were ready for it to take off and keep going. It was a gap up and flirted with getting to the Bollinger Band mean briefly, and it sold off a little bit to 388. But the important part of this to me was just how small that daily range was. This felt much more like a consolidation. Everything stayed north of the PSAR. We got the RLXD confirmed today. So very shortly, this winter is going to turn to spring pretty soon. So all it takes is a breakout through 392 and 394, and it will feel like this is a tipping point. So this is a really crucial moment. What does it do with this doji? And that's what a doji is. Like a what? An equally large probability of an equally large move in either direction. And you can see that if it breaks through the daily low and through the PSAR and the 2-day low and out of the river and through the dragon down to Z2, you can see that as a ladder to the downside or falling down the stairs. And that'll go fast if it breaks. And then when it gets below, 362, the true collapsing dragon, here's a collapsing dragon 1, and that's dragon 2. So there's a lot of room for that to happen. Could that happen? Well, it just did. So you're not allowed to be surprised if that move to the downside happens. But at the same time, a move back up to the 10-day high, 30-day high can happen. All it's got to do is break out of the 5 and 10-day high that was done today across the Bollinger Band mean, close this gap. Then it's on the far side of the gap, and then it's a short hop to the edge of the river and the 30-day high, and then this will feel like it's amazing and obvious. So that really makes this a perfect critical state. And that tiny little compressed doji makes this a coiled spring ready to expand sharp in either direction. So that's where we are. Tomorrow's going to be the primo deluxe trading day. You have a large move that'll take you to the top of the dragon at 414. So plenty of room to run. That's a $25 move. 25, sorry, not 28. $25 move. And from a breakdown from 388 to 362 is a, what, 23? Yeah, $23 move. So you have equally large moves on about a $2 risk. So you got a 10-to-1 swing trade in either direction, and it's equally likely. And anybody that tells you that they know what it's going to do is full of crap. Or if they're right, it just means they flipped a coin and got it right. Well done. So that's a compound critical state just ready to happen right there. Tomorrow's going to be primo deluxe trading day. Here's what the sectors did. First, the S&P was down a fraction at 0.38. Diamonds were a little better at 0.21. Here's the cutoff line to the gains and losses, right? There's emerging markets at 0.12. And the Russell was the strongest index at 0.37. Not much to write home about. But the tech, which were the leaders last week, were the losers today, minus 0.73, and treasuries minus 0.85. So a pretty narrow spread between best and worst. And that's what you get when you're in the middle of a doji, which again is a range compression ready to make large moves in either direction with equal likelihood. Nothing to choose from direction-wise, except to be ready with targets in both directions. So your trading plan for tomorrow should be, hey, what's the size of the gap? And you get that by looking at the futures. If the gap is large in either direction, you're going to have a large follow through. We just don't know which direction. A large gap predicts a large follow through. If it's a small gap, then a hybrid frog from the open then allows you to break out and follow it, and it may build momentum into a range stat move, a plus range stat or a minus range stat in either direction. A large gap, simply, here's where it closes. If it's a large gap in either direction, the large move could either be to recover or to continue. Equally likely in both cases. So the size of the gap tells you what to expect about the size of the move. The bigger the gap, the bigger the follow through. It just does not predict direction. So after you figure out what to do about a gap, what if it's a gap up or a gap down? What if it's large or small? What am I going to do in those four cases? Where am I going to look? How am I going to trade it? And then you say, if the market is primarily down after that first 5, 10, 30 minutes, between 5 and 30 minutes, while it's sorting out what direction it's going to do, if the market is down decisively, what are the targets you're going to look for, and how are you going to find the mover? But if the market is up decisively, how are you going to find the mover, and which targets are you going to be prepared to hit? And if it just monkeys around in the middle and against all odds is simply forming into a sideways quiet channel, which we're going to wait until it becomes a Z3P, or even better, a super pinch. We're going to wait to see those Z3 lines really tightly compress until they're so tight that they are less than a frog box, and then we can play that breakout. But we're not going to chase it while it's becoming sideways quiet channel. We know what to do if it's large directional down and large directional up, but these little compression zones, wait until you see the Z3P, then crush it, and be ready to be wrong first. Be ready to fake one, go two, or fake one, go two, and you're going to take a couple signals, because the breakout, when it finally happens, will more than pay for all the jockeying around in the false breakouts. But here's the trick. The false breakout looks just like a breakout because it's in the name. It's a breakout. All right. Let's take a look at the positions or the sectors that lost, that underperformed today. So there's the S&P at 0.38. So we had the FANGs and tech down 0.5, materials down 0.8, discretionary down 1, Ethereum, agriculture, ARC Genomics, Global Future of Finance down to 2%. Bitcoin 2.2. ARC Innovation, the VIX. Now, the VIX being that losing money today is a vote towards the upside tomorrow. The fact that people were not willing to pay a premium for portfolio insurance. Blockchain and blended large cap commodity or large cap cryptos, GDLC -3%. Then individual targets, all of the the global future of finance guys, the disruptors. Coinbase -11%, Bakkt 4.8%, PayPal 2.25%, Squarespace 2.2%. The metals continuing to suffer, down 2%, US Steel. Microsoft, even a big loser today, -1%. The other steel company, Cliff, down 0.7%. So a wide variety of sectors and targets that underperformed. So yeah, I'm going to probably take these for my trading plan to be ready if market down, then look for those and be ready for them. And I have a mix of symbols that are already weak and easy to believe that they're going to fail. On the upside, the things that were better than the S&P, which was down 0.3, you get finance, biotech, staples, real estate, blended commodities down 0.2, lumber down 0.2. The other lumber up 0.16, marijuana, clean energy, Mexico, commercial real estate, lithium, wheat and precious metals, oil, Brazil, energy, oil exploration. And then individual companies. Robinhood really distinguished itself from all these other financial disruptors. So Robinhood up 14%. Is there another day of momentum in that? Maybe. Is tomorrow the possibility of, hey, today was up 14% and there's no greater fool that wants to keep buying it. And so maybe it starts selling, and then everybody that made money on it starts hitting their stops, and that could accelerate to the downside. So Robinhood is certainly something I might be ready to play in either direction, because I could make a case for why there's more upside as well as big downside. So Robinhood is interesting for that reason. Devon Energy is an easy and a no-brainer, up 7.5%. Alcoa 0.4, which is different than Cliff and US Steel. So real distinction, divergence in Alcoa. So Alcoa would be on my mind. Aussie dollar and Apple. Tesla was better. It was 0.32. Still closed above 700. His R10 is now is about $6. That's good. Even better. So from the sectors, I already have some things to think about to prepare for tomorrow's scenarios. Again, I'm thinking about the gap, large or small. And then if the market is up large, down large, or compressing into a sideways, because today was a doji, tomorrow could be a doji. What do I do in those three scenarios? And remember, the gap is simply going to tell us what to expect. If it's a really large gap, then that might be the kind of day where we're going to see a range stat move. And you can know that before the market even opens because you're looking at the S&P futures. All right. Let's take a look at some more trading ideas. Sniper trade of the day. ARE. This was a Godzilla. You know, 2 weeks ago. And all it's done since then has been a reliable intraday and swing trader all the way forward, coming out of the Godzilla condition. As it has recovered from the sell-off, more and more people are beginning to believe in it again, and it's done nothing but climb up the ladder of success. So here's a $1 risk box. Here was the open. There's your PSAR all the way up. That's the no-brainerest trade there ever was. It opens within the previous day's range, breaks out the 5-day or the next 5-minute candle, makes a new intraday high. There's your standard risk. There's your stop. At this point, you're still, if that's one, you got 1, 2. You've locked in 2 units of reward for 1 unit of risk, and it's only at noon. And you're giving it a half a risk box to play with. You say, all right, stay above that red line and I'll follow you all the way up. You tell me when to get out, but I know what I'm following. Sniper trade of the day, ARE. This is nice because, you know, it's in that S&P 500, but it's not one of the uber large caps. It's stuck nice and safely here in the middle where it is a combination of liquid. So you get a lot of trading volume and small spreads, but it's not so large that 1 million people are pushing it around. It just quietly goes about its business and is moving back towards more like fair value. And we're just on that cross-country train, just riding along. Sniper trade of the day. That's what the Godzilla pattern can lead to when you stay with it day after day. It's a winner. We've already done the health check. Here is dashboard 1, still in bearish normal. We're doing pretty good on the short term, although we gave back a little bit today. We've come out of the red, but still vulnerable. This is a cautious market. Risk Z is telling us, be careful. There's a equally likelihood of downward as upward movements. So be ready. All of the US indexes are signaling on the short side in the overreaction system, meaning that they have sold off 22%, have bounced high enough and terminated in a doji, which says, hey, there's a really good chance it could fail. And there's a really good chance it could gain. So instead of just blindly shorting that, we're going to wait to see it break down below today's low. And if it does, we'll follow price. But if it breaks out to the upside, this could be leg one. That could be leg two, as we laid out on the market health check. So that's how I interpret these. You can trade this as a mechanical system, but that's how I optimize it for shorter term trading. 10-day min pains, diamonds, Pfizer, Johnson & Johnson, Walgreens. That's all your healthcare right there. 1, 2, 3 healthcare plus Coca-Cola. On the max pain, Chevron, Caterpillar, ExxonMobil. So the energy is still suffering in some of those industrials like Alcoa and Cat. Now I like that Alcoa is a 10-day max pain, but was the best metals company. That tells me that the recovery might have started today and that we're in the first day of what could be a 5-day recovery move. So I'll be closely attending to Alcoa, one of my favorite trading vehicles anyway, I might say. Things to notice here. Lots of dojis. So everything is patiently standing by. When you have tight little dojis, that's going to give you favorable reward to risk breakouts, because if the 10-day high is up here and that thing is sold off a distance and has a tiny little doji, when I put that risk box around there and call that 1R, that gives me large multiples just back to the 10-day high. So something like Caterpillar can be 7-1. Chevron can be 9-1. DuPont 8-1, etc. So I can use that information to find really favorable reward to risk ratios just from this chart. That's called swing trading one day at a time. That's a hybrid trading technique. ETF 30 tactical, a handful of dojis, plenty of large reward to risk multiples, a recovery now in the energy, which had been suffering, but now today was pretty strong. You see that in the energy sector here, a really strong day after a bad week and month. And the same with oil. And I like this Brazil and Latin America, 2 strong days. So that's not Asia. It's not the US. It's not Japan. It's just Latin America quietly getting it done while the big bull elephants stomp around. So I like Brazil. In the auto framer, still plenty of things better than 2-1. Chevron, XLE, DuPont, Cat. Look, that's all your industrials right there. And they've all sold off so much and then compressed to tight ranges today that you get enormous reward to risk ratios. Very favorable to look. I love to see Cliff and Brazil in there, 3-1. Oil and treasuries, 2.5-1. Alcoa, 2.2-1. That's all I need right there. Because when they have sold off so much that the return to the 10-day high gives you these incredible reward to risk ratios, it also means that if it fails, that whatever was causing this to be bad news is continuing. So you get leg 1 is equal to leg 2. And now you can just follow the flow of performance. You don't have to think too hard. That's when I do best, not having to think too hard. Trust in the numbers. Lots of squeezes today. Not a surprise when the range was that tight. XLP, McDonald's, Coke, diamonds, and the S&P itself. Even Tesla is tightly compressed. Alcoa. Alcoa is just screaming at me in every possible way. Chevron and Walmart, all those are poised. Those are tightly coiled springs. When they're on this report and they're highlighted, that means the spring has compressed, that when it breaks out in either direction, you're going to get these large multiples. So that's why they are preferred trading targets. Only one Godzilla in the whole S&P 500, DuPont. Only one in the tactical symbol set, Bitcoin. This is a quiet Godzilla, stealthy, coming up. It's like here's the ocean waves, and this is Godzilla himself storming out of the deep under stealthy conditions, coming up to stomp on Tokyo. So he hasn't emerged yet, but he's ready to come out and pounce. That's what that minus 0.6 5-day Z-score is. Whereas DuPont is already had a 2 sigma move over the last 5 days. It's already out and stomping. That's how you read that. That's the two kinds of Godzillas, the stealthy one and an enraged Godzilla. That would be an enraged Godzilla right there. He's already out. But if this was like the ocean level and all you could see was his little eyes, that would be the stealthy Godzilla. That's the one that surprises you. This is the one that just terrifies you and crushes you. That's the one that surprises you. A couple fireworks and popcorns here. So these are already large, volatile 5-day, but they have compressed into a doji today, little quiet 1 days. So this was a large 5-day pop, 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 pop. And today was the little quiet doji of silence, which makes you wonder, is this going to go or is it going to fall to earth? I don't know. That's what makes this one so interesting, as a continuation or a sharp reversal. The fence sitters, like sitting in a barbecue, they are in the middle of their weekly and daily between 0.4 and 0.6. And large, here are the ones with large 5-day moves already. They've already started to move. So we like those. And here's the quiet ones, just getting ready to start moving. My brother says, look at BMY, so we will. Managed to obscure the numbers. So he's a 0.98, 0.93, 0.93. So that's pretty much a fireworks. Oh, here he is. And Lily, 0.98, 0.93, 2, and a very quiet 1-day doji ready to explode in either direction with a 20-cent R10 and $1.80 on the R stat. Knock, knock. Who's there? BMY. The most quiet on the basis of the 5-day, the most volatile in the S&P on the basis of the 5-day. There's a 4 sigma move that has quieted on a 1-day doji. Yeah. My brother wants to look at BMY, so we're gonna indulge him. BMY, where are you at? Come on now. Sure enough. So that's what this is what a fireworks looks like. So here's our 150-day look back. That's the purple box. Hey, there was a Godzilla for you, by the way, and an SSC and a COTA 2 and a COTA 2 and a COTA 2 and a COTA 2. You might want to pay attention to those when they're in Godzilla, because you might get that. That's a move from 53 to 80. That's a 60% gain lately. But now it's monkeying around. And you say, well, it held support on the pullback to the 30-day low. And now here's the explosion of the fireworks. And it has exploded up to a whole brand new highest high. There's no resistance overhead. Could that follow through to the upside on a day when the market was down? Yeah, it could. It was a big range day today, too. Most of that. Oh, that's a pretty nice move right from the get-go. Since it was a Godzilla on Friday, or a fireworks with a 20. There's your 20. Jeez, man, how did I miss that one today? There's your 20-cent. There's your 20-cent risk box right from the open. 1, 2, 3, 4, and then what else? Go golfing. So, do you think there could be some more buying pressure on that tomorrow? It could be. It held pretty much all the way through. You know, after it got to the new fair value, it's up in here. But if it breaks down below 79.75, wouldn't you be entitled to think that, hey, maybe, just maybe, that thing could come back into the previous fair value with the target down here at 79. So that's an 75-cent drop on a 20-cent risk. That's a 3-to-1, just a recovery back to the previous 10 all-time high. But if this thing breaks out, up it's going to go. So you got to think like, well, if it takes out the dragon up here and the RL10, anything north of 80.50, and that thing is off to the races, and it could look just like it did over here. Don't be surprised tomorrow if this thing doesn't rage to the upside and then trap people and start to collapse. So if you get a nice trade in here, make sure that you lock that in. So that's what BMY looks like. Eli Lilly's going to look pretty much the same way. It's almost the same stats across the board. So you can tell without looking that Lilly's going to look the same way in the same market space. Shift back to the daily. There's the 150. So this is at the very top of its trading range, 150-day. Here's the 10-day look back, the 30-day look back. This is ready to just go. No resistance overhead. Watch both of those. Hear us now, believe us later. All right, so there's the S&P's most quiet and most volatile. Here's our sniper auto framer for the tactical symbol set. This is sorted by percent changed. So you can look for continuations to the upside or a reversal. And the ones at the bottom, either continued failure or a reversal. It is more likely to have large moves that come out of those extreme regions. And then the R10 gives you that column gives you the intraday piece. Now, XLE is interesting because it's a 6.4 reward to risk on the swing trade, 5-to-1 on XOP, almost 3-to-1 on oil. So the energy is well oversold and ready to bounce. There's your sniper stats on the tactical symbol set. I leave that to your reading enjoyment. Saw some weakness creep back in with the exception of Pfizer and Walgreens, Mexico and healthcare. So I don't know which to choose, BMY or LLY. Okay, we'll play XLV. Same thing. Go back to my personal list here for XLV. Looking at the daily. Yeah, XLV is lagging a little bit behind those two, so there's still room for that to break out. That tells you just how good BMY and Lilly are. But that's a pretty good chart for an S&P 500 sector. It did not sell off as harshly as, let's say, materials or tech did, or finance. That's in pretty good shape. And if it can break out of that 30-day high, that's going to be really good. And that will lend more power to the move in BMY and Lilly. So let's be ready for that tomorrow. Yeah, when you're in a bear market like this, that's maximum coyote, master opportunist, never gets trapped, takes what he can, and happy to do so. All right, background stats. All right, let's take a look at sniper trades of the day. All right, so these are all continuation trades from last week. Here's Win Casinos. Blue line is the opening of the day. Yellow box is the standard R10. This one gapped up, rushed way high, sold off more than a standard risk box. I tried it on the short side. Micro win. Tried it on the long side. I looked at that as a like a K2 and continuation to the upside, but it failed quickly, so it took half the R loss. Tried the short when it broke through the dragon, and I'm front running the PSAR flip, so I'm ready to get short on that one. It works. It works. It works. Ooh, works good. Standard recovery for about 1.5. I take the RLXD 1, 2, 3 entry to the upside, standard risk box. Stalls, take a half. Not much more. It ran out of gas. It was looking choppy. So nothing ventured, nothing gained. Couple are. Here's Brazil, 25-cent risk box. Breakout about 30 minutes in, 25 minutes in. Standard risk, 25 cents to the bottom of the dragon. Lock in again. Staying above the dragon. Good. Oh, come on. And fail. PSAR. That's about 2. Tesla, about a $6 risk box. Big gap up. I missed the short in the first bar because I thought it was actually going to work today. So when the second bar broke below the first bar's low, I'm short with standard risk on it, check or hold. Nice sell-off. I should be on a winning trade now. It doesn't really have much follow through to the downside, so I take half an hour win. Crosses the dragon. I wait for like a 1, 2, 3 entry. Standard risk. Quick scratch. Never really followed through. And it's like it saw the PSAR coming and rejected, so I got out of it. I tried shorten after it crossed the dragon. Standard risk box. Never failed. Quick scratch. Crosses the dragon again. Standard risk to try the long side. Micro win. It just wasn't working. I thought about getting short here, but it was consolidating so much that I didn't really feel that there was a lot of action in this. I felt like it was resting, if I can say it that way. So this was basically mostly just maybe half an hour. Devon Energy. One, 2, 3 entry, standard risk. Nice. Nicer. Content. That's about 3R. ARE, that's the, we saw that one, the sniper trade of the day already. So that was this is what it looks like in slow motion. 1, 2, 3 entry above the dragon, dragon's rising, risk box off the bottom. Lock in the green box against the red box of risk. Blue box, I'm giving it some room to wiggle. So probably 2R in hand. The most satisfying trade of the day, I will say that. Chevron. So that's that blue line is the opening. I just wanted to see how sideways and nothing that Friday was. So using $1 risk. Gap up, breaks out, a risk box above the PSAR, quick fail for loss of a half, re-entry, quick loss for half an hour, darn it, re-entry, about 1 hour, so I'm about net zero right now. 1, 2, 3 re-entry, scratch. I just couldn't take that one as it broke out because I've just been 1, 2, 3, 4 trades and nothing to show for it. So I didn't take that one. And of course, that's the one that worked. So I forgive myself. I tried short and this gave me a micro win. So I was lucky to get out of that one with my skin. And a reminder that you don't have to get them all, but you should try. Keep shooting. Last one. Oh, and I think we already saw this one. Win. Yeah. This was that. Yeah, we already saw win. Okay. Let's look at the traders today. So today was kind of a grinding day for me in the sniper trades, but pretty happy with the performance and the follow throughs. All right, here's Paul on Merck. This was the open. So it had a really strong close. And then he saw this, so he buys it right there. Perfect. Now, we get 0.13 out of this one, right? And at some, so if that's call it 0.13. So this is almost 0.5 in hand. And so we gave back 1, 2, and kept a third. So on this one, when you have that nice run early in the morning, and then it closes and then it opens and then cannot make a new high and goes below that first one, you might want on the first trade of the day, just go ahead and get paid. Why not get paid? Or at the edge of the dragon, why not get paid? But at some point, when you know what your average win is, where was this with respect to your average win? If that's your average win, you don't want to give most of your average win back. You want to, that's the ones where you want to start locking in one bar low or something like that. The sideways chop didn't give him anything. So micro fractional loss. If we just tighten this one up here, we're in better shape. And you can start the day with a win in hand. That's always good for the psychology at the start of the week. Don't underestimate that. Here's Health Peak. This is PEAK. Here's our PSAR flip box. Here's the opening of the day. There's the PSAR flip. There's a COTA 2. There's a COTA 2. That one pays nicely. That's a really good exit. I like the effort on the short, and I love the quick exit. So we made up for yesterday, but man, here's our, you got to be ready to go. Tim gave a shot to the 3 minutes. He likes that, the feel of that time frame. Let's see what we got here. A lot of sideways chop on this one today. So I like that one. Quick exit. I like the re-entry. Got paid a little bit. Pretty good COTA 2 here. There just wasn't much in the short. He got what was pretty much available. This one, there was no follow through. I think we could have cut that a little sooner. So there's not much improvement that you can make in here, with the possible exception of right here, that you tried long and it came back and you sold off. And then when it crosses the VWAP, we might have gotten a piece of that, and that would have made the difference on the day. But still, there just wasn't much follow through in that overnight, because he's trading in the overnight session. And then just not much, there just wasn't much to be made in here today at all, with that one exception. Yeah. So I'm not concerned about that one at all. I think that was a pretty good experience today. I thought you were pretty accurate. And you'll find the 3 minutes becomes as easy and natural as the 5 minutes. All right, here's Jack with Alcoa. He tries the next breakout. That one, we shouldn't take a full 1 hour. I think we should probably be out of that by about here, about halfway down. When this rolls over and it can't make a new high and it's failing, done. This a fraction slow. And then at one point, let's see if that's a scratch and if that's 1 hour. This was probably a 0.5 at some place. And like on the earlier discussion, especially when you're trying to recover from one, it's good for your psychology to get paid. It has a doji, so maybe, and it's pushing Z3. So maybe lock that in and just take that. This is a great short. This is the one right about here. I'd have been tempted for a collapsing dragon second position, and would have probably scratched it here. And then probably re-entered and would have tried to get some piece in here, like maybe a 1, 2, 3. I feel like on a single position, we're down here by Z3. A 1, 2, 3 exit is here. That might add another, say, 0.3 or 0.4 there. This would have been tempting. Now, this is a COTA 2. Right here, there's the formal PSAR flip. Here's the SSC. And I know we're out of the trade, but just so that we start recognizing those extreme moves often have extreme reversals. Pretty good work there. We could have come out of that with maybe an R. Tesla, you got a fraction. Oh no, total -1. I'm sorry. Let's see. So there was the open. It moves a risk box off the top, gets it here. When that starts failing, cut. This one on the rebound, 1, 2, 3. That's about as good as you're going to get. And now you got the two dragon horns right here. We call those the dragon horns. When it comes out of Z3 and starts rolling over, we've got to get paid in here. I don't think your PSAR is correct. Take a look, because that seems really fragmented. Double check your PSAR setting. Yeah, I like that. You have like a this is a Kata 2, it feels like, and you're trying to play this. When that rolls over, that's pretty good. This is a great short. And on this one, if my last one was 0.6 and I'm at 1.2 on this one, I want this one to pay for that one. So I don't want to let it come back and just scratch them. I'd like to use the extra juice to get even. I'm just, I'm vindictive that way. Be a little meaner spirited. Play the psychology game with yourself on that one. That builds emotional bank account when you can be evil and win. Just saying. Whoops, what happened here? Sorry. And meanwhile, this is the advantage of multiple non-correlated positions. And then where I got 3 out of Devin, he brings home 7 1/4. Quit showing off. Boy, is that a good exit. This might have been a potential second entry. This little piece right here, this is the one I want you to notice. When you get this big run up and then the pullback, hardly, it doesn't even give you a nice big run up for like an emerging dragon. You know, where that you get that pullback and then this breakout. That's a real clear Kata 2. When this one only gives you that little wiggle and go, man, you can get that. And then you got an extra squeeze out of there. This was pretty good. 1, 2, 3 would be here, but you got that. That's pretty good. That's a pretty good day at work. Woj. What I'm looking is what's he getting on the big moves? Yeah, he's getting paid on the big moves. And he's getting pretty precise in here. That's all right. This one was slow. Yeah, god dang it. One miss can make a difference. And they all look the same, leaving the I'm wondering if we're over trading in here. That doesn't look too bad, to be honest. This exit here could be followed by a re-entry there. That looks like it's late. So you got to be there and ready and watch your late entries. These great big turning points in those dragons after that 1, 2, 3, and then roll over and then crosses. That's a great short, but there's also room in here for that first leg with a target of the piece of the VWAP. And then that leads to the second one. This is pretty good in Tesla. You got what was available. Proctor. Let's see. That's great short. We gave back too much. I like the long, good quick exit. I like this short there instead of here. And then there's one here that probably would have scratched. There just wasn't much room in there. Pretty good work. Luke brings home 8.5 in the 5-minute Aussie. Let's check as well here. Z3 pinch. Plays like a Z2 breakout with a standard risk. Gets paid. Good reentry. Quick exit. Crosses the 270. Crushes the short. Now, this is, again, I'm going to keep saying this until you start doing it. Notice how the RL10 never really budges, but that there was a short moment here where price got a little choppy. That was so unconvincing to the RL10 that the downward movement barely budged. So when it doesn't even roll up, but just fails immediately, that's where you can get a second position, especially when you're close to what the previous Z3 pinch was. That sort of tells you that's an important one, or maybe even this one. So somewhere in this region, there's a possibility of a second position. And then when you're down here among the Z3s and it reverses, a 1, 2, 3 exits here. So that's really good. Good accuracy. You resisted the chase. That was well done. This might have been taken here, but that's still really good. You got what was there. You got what was available. Good scratch. You got what was pretty much available. We might have done a fraction better in here, but that's still really good work. And there was another +3 available in there probably by studying that little structure. So again, just things to watch for when you have the pinch. Remember, guys looking at the longer term periods, they don't know that, they don't even see that, but what they can see, this feels like where the breakout occurs. When the previous pinch, what used to be a Z3 now collapses. Yeah. Study that idea. Plus you got the rollover of the 270. Yeah, there may be something more in there. All right, good work today, guys. We'll get this published and posted, and keep up the great work. You guys are crushing it.